The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Welcome to the big snowstorm of the East. They're expecting anywhere from 1 to 2 feet back there. My sympathies with you folks. Don't particularly like snow a lot, so I hope you get through it okay. They're certainly bringing the storm Jonas to everybody's attention, so we'll see what happens. Fortunately, the market will be open all day because the storm is not due until late in the afternoon. Let's discuss, the first thing I want to discuss is I've posted the chart of how we look at open interest. This basically comes from Steve Breeze. He's he is the resident expert in open interest. But basically, if you have a rising open interest and rising prices, the market is strong. And the reason why it's strong is the bulls are in control. And that's, because prices are going higher, there's more buyers than sellers. They're the same, they're the same buyers and sellers for every contract. There's got to be a buyer and a seller. But because prices are going up, they have control. Now, if prices are, if open interest is rising and prices are falling, that means that, bulls are exiting the market and the market is weakening. Now, the thing that we watch for is when you have a falling interest rate and falling open interest, because that tells you that the market is strengthening. And we don't have any of those situations going on in crude oil at the present time. There's been a few fluctuations back and forth, but basically it's still at number one, where we have rising open interest and rising prices. Now, that doesn't mean that the market can't rally from here. I mean, it doesn't mean that at all. It's just that it's a flag that we want to watch. If you remember a couple years back when gold was at 1930 per ounce and silver was at 49, we were seeing tremendous falling prices, rising prices and falling open interest, where the market was weakening very badly. We were alerting you to that point. So this is only to be used when you see something really dramatic pop up, and that's the bottom line behind it. It's certainly not a trading tool. It's more of, I would consider, a warning sign of some kind. Now, we had a lot of big things happen this week, folks. We probably can't cover them all on the show today, but I want to cover the ones that I think that are the most important, because the things that we look at are patterns, and we're coming into a really significant pattern here that we're going to discuss in just a minute. But the first chart we're going to look at here is the S&P on a weekly basis, going back to 2013, and you'll notice that you'll see these hammer candles that Steve Rhodes is such an expert at picking out. You'll notice that we just had a hammer candle form here on the 15th, on the 20th. And that was a perfect ABCD pattern. Now, I want you to bear with me for just a minute and take your mind back to March. Let's try that again, Larry. Take your mind back to May the 19th of 2015. We had our good friend Norm Winsky of Astrotrends on. At that day, we had a new moon, and we had Mercury going retrograde, and Norm called for a big move in the market at that time, and as you can see, that indeed happened. We went down sharply into August 24th. What we've done now is we've completed this ABCD pattern, and we have a full moon today, and then we also, it's tomorrow, and then we have a Mercury is going into direct station on the 25th. That will be Sunday. So as you can see here, we've been down very sharply for about 10 and a half weeks. Let me see, about 10 weeks here. And so we're due for a rally just based on this particular pattern. Now, the other thing that we have that we watch very, very closely is the New York Stock Exchange Index. What I'm trying to do is to show you that the market is ready for a bounce. That's basically what it looks like to me. Cycles are really hard to understand. I mean, some people understand them a lot better than others, but the patterns are that I do understand. And we're looking at some patterns that have completed, and they're worthy of our interpretation. That doesn't mean we can't have a crash in here. There could be an outlier event going on, but remember, crashes, they don't happen very often. The last crash we had was 1987. Give me a break, folks. That's what, 26 years ago. Most of you guys weren't even old or weren't even born by then, so who knows? So just try to play the swings, and we're ready to have a pretty substantial rally. That's my guess. We'll wait and see. Another one that is telling us that we're very, very close to a potential rally here is the let me push this up. Now this has a mistake on it because I typed it in wrong, but this shows it as a hanging man, and it's not. This is a hammer pattern that we're seeing here in the Dow Jones Transportation. Just forget about that hanging man candle. It's a hammer candle, and as you can see, we've had a 300-point rally off of this bottom this week. Now that's all in good, but we have these cycles, and remember we've had a little 3-day rally here, and sometimes in bear markets, that's all you're going to get. So we have to, pay attention, to that also. And if we look at some of the longer term things on some of these things, they look really bad when you're looking at the emerging markets in China and places like that. Now the next one we wanted to look at is the IWM, which is the Russell Small Cap. And here again, you're going to see the market, as a perfect ABCD structure. We came down into August 24th. We rallied up exactly to the 61% retracement back in November. And then we've broken very hard down into this level here. And we made a perfect ABCD. And on the big day when the Dow was down 500 points, closing down 250, the small caps was actually up that day. So that's another thing that we certainly want to keep in mind as we come into this the weekend here that we're approaching here this afternoon. Now, we do have a couple of things. I probably should go. I wanted to do the E-mini S&P because that's the one that everybody's watching. As you can see here, when I post this chart up, you'll see that we're still in a substantial downtrend. We did complete the big ABCD pattern over the past 10 days. That came in at 1804. The price that it projected to was 1812, and we went below that for just a few seconds, and then had a pretty good rally. We rallied 90 points, which has been our biggest rally. But now what we're doing is we're coming into this pretty. What I would love to have seen was to have us making a bottom here on this full moon and Mercury going direct, because that would have really been a good thing. And believe me, it has an orb of 1 day, so we could easily see what's going on. But if we're strong this coming week, that tells us that we are into that rally mode, and that should take us in to probably mid-February to look for a place to get short, because this market really looks bad. When you stop and think of all the records that it's broken already this year, the fact that we were down 12% the first 2 weeks in January, and the worst January trading day ever, not good. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed with TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're going to take a look here at a most amazing forecast that we've been showing here for the past 6 or 8 weeks from Larry Edelson, using some cycle phenomenon, using neural networks to predict what's going on. This happens to be a prediction on the gold market. And what's important here is where we are right now. As you can see, that date up there is actually 125. That comes in on a Sunday, of course. And we've had gold in this little bit of a bullish range here since we bottomed at 1047, and then we've gone up to where we are now. And what this is forecasting now is for a move down into the second week of February, which is what is pretty much showing what's happening in the gold market itself. And the first thing I'm going to show you here is what we're looking at over the last few days here in the gold, because we had that little pattern. Yesterday we made the Gartley pattern down at 1094, and then we rallied up. And if you'll notice, we've made the lower tops here. That's a 135 pattern that has been used by Roy Longstreet and his son Bill for many years. And it's a really great pattern for trading with the trend, because if you have lower tops, you're in a downtrend. If you have higher bottoms, you're in an uptrend. And as you can see, we've completed a big ABCD pattern from January 14th, but the low was actually when we had that big drop that came in really late December, I believe, right before New Year's Eve, which was spot on to what Edelson was looking for. And now we should be we were supposed to rally up to 1130, and we only got to the 1110 level so far. The other thing that we watch when we're looking at the whole thing here is the relationship between the gold and the silver. And as you'll see from this next chart, the silver has been far weaker than the gold. The silver was unable to take out the 1440 level, which was the early high in January, and of course we shattered that level in the gold market, which was at 1085, and we went all the way up to 1110. So we'll be looking for our next buy in gold around the 8th of February. And we'll see, as long as this thing is working, you have to pay attention to it, folks. I mean, you got to realize this was done a long time ago, and it's been following very, very closely. So it shows you that there's some cyclical nature here in the gold market that Edelson has picked out. And so we might as well use everything that we have, going, going as nearly as close as we can to pick out where these highs and lows are going to be. Now, yesterday we talked about the potential for crude oil because of the fact that we had this long-term cycle, the weekly cycle that was making an ABCD pattern, and in fact, so far, we've already had a 12% rally in the first, 14 hours. If this is the bottom, and we're not sure that it is, but it started the right way. That's one good thing. But if you'll look at this, this is simple mathematics, folks. From point A to point B was 15 weeks down, and from point C to point D was 15 weeks down. And we know that the ABCD pattern is one of the more reliable and easy to see. You don't have to be a rocket scientist to figure this out. Those two triangles there that you're looking at just basically shows how time and price, come together down here at this level of around 26 dollars a barrel. And of course, the whole world is bearish this. There's no question about that. And we'll move on to the next part about this oil complex, which is really interesting. And that is, I put that chart up, didn't I? Oh dear, don't tell me I didn't. Well, let's do it again. Let's try it again. Hold on a second and I'll get that chart up. Oh dear. Sometimes these things are beyond my pay grade. Okay. There we go. And but we are having a little bit of a rally, and that's all it is so far, is a rally. We haven't really done any damage to the shorts. The shorts won't be, really, really concerned. And you get about a $6 or $7 rally in oil. If we do get that, then you'll be looking at something that could be much better. Now, one of the charts that we talked about yesterday was one from Tom Pelk, our friend from Nomura Securities in London, and he was showing the chart of the U.S. dollar, versus the Canadian dollar on how it's been rallying against the Canadian dollar. And as you can see, he had those two circles up there that was showing resistance. But if you'll look at the pattern, I'm going to show it to you a little bit differently on a daily basis here, but you can see that three drive pattern that has been forming since early this year. And then we had the 382 pullback in late September around the 128 level. And then, of course, we've gone all the way up to, we hit 147, but we've come all the way down, folks, in just 2 days. We've come all the way down to a 61% retracement of the whole week's range. That's very, very unusual. And we'll look at this here a little bit. Just move it over. I want to show it to you on a, there it is. Just give me 1 second to get it up. I want to show it to you on a little bit of a microscope so you can see where we are on a shorter term daily basis. You'll see that we've completed that three drive pattern. The ABCD pattern measured to 145 and change, and we got to 147. And then in the last the last 3 days, we've come down to a 61% retracement of our low from December. And at this 141.60 level, and of course that's going to be interesting because we break that. That's going to tell us that this trend is most probably the Canadian dollar is going to gain on the U.S. dollar. That's what it looks like, from a longer term perspective. Now, that is important because we know that the loonie, which is the Canadian dollar, has a correlation to crude oil in the neighborhood of about 95%. In other words, as crude oil goes up, the loonie goes up also, and that's and that could be just the reverse. If crude oil goes up, we could get a reversal in the Canadian dollar, and it could start to gain against the U.S. dollar for the first time in quite some time. So we'll have to look and see what's really happened. Now, we're going to take a look at the yen because that was one that we also talked about from our good friend Jim Bartolioni. Sent this in to us a week ago, and just 1 second and I'll get it up here. There we go. And we'll get it up here and we'll take a look at it, because we have come down and we've broken that trend line by quite a bit in the dollar yen. And again, I think that we could get it all the way down to parity again, around 100, and actually 110 is what I'm looking at for the yen. Is trading at 118 right now, so we'll have to, just give it a little bit of time in here. But that would be our first major ABCD correction in 4 years in the dollar yen. So that's one. If we do get back there, we have to check in with our good friend King Dollar, Tom O'Brien, because he would really be able to probably give us an idea of what's happening. Because if we make that big ABCD in the dollar yen, that would be a very, very easy trade to do, because the trend is so strong. And as Gartley said in his book, The Profits of the Stock Market, is that if you buy the first ABCD correction in a bull market, that's usually a very good trade, because it gives you your last chance to catch the train to the upside. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we have wanted to talk a little bit about the heating oil because we posted this chart with this big ABCD pattern in the long-term heating oil chart that's taken us down and completed. And as you can see, that's made a 61% retracement of the low from way back in 1991, I believe. So we're looking at a potential here for oil and heating oil and crude oil to rally a little bit. Now we're rallying this morning. I don't know if it's related to anything, but when you hear people talk about the stock market is related to the heating oil and stuff, folks, those people that are on Bloomberg and CNBC, they have to fight every day for material to bring on because they can't bring on the same material. I have the same problem here. I try to make this as entertaining as I can for this 1 hour and bring you different things, but that's not always possible. So I try to bring out the things that I think are the most important. They have a larger problem because they're on, 16 hours a day, and it's really tough to, keep that up. So they talk about what happens with the market, and they have various guests on that have their opinion, and everybody has an opinion. As Tudor Jones says, everybody has an opinion, and it usually smells. So you have to be able to realize that when we give you an idea like this, you have to take the responsibility for this. All I'm doing is I'm just looking at what the patterns are doing. I don't understand the planetary stuff as much as I probably should. I understand little bits and pieces of it, which I see happening, and they're tradable, of course. But I think we'll be able to see, if it's what's wrong. I've had a request to tell a joke. And let me see if I can get it right. Let me see. Do you know the difference between Dubai and Abu Dhabi? In Dubai, they don't have the Flintstones, but in Dubai, Abadabadoo. How about that one? Oh boy, I'm going to lose my Rodney Dangerfield impersonation if I keep that up. Okay, let's see we'll see what's happening here. Anyway, the main thing is, folks, we are over some really. Already been canceled twice already, so I better shut up with the jokes. I can't tell the jokes that I'd really like to tell because they're a tiny bit off color, and I don't want to do. I will tell the difference between, if anybody gets this one, they get a reward. What's the difference between a Harley Davidson motorcycle and a Hoover vacuum cleaner? It's the position of the dirt bag. Okay, now let's get on to the markets. Otherwise, Mr. O'Brien is going to kick me off the air, and I don't want to do that. No more jokes. I'm not going to do that. That's it. No more jokes. That's not what we're going to do. Okay, let's get back to the transportation index. As you can see, well, I've already done that one. At least I've figured that how to do that. I've had a request to take a look at IBM. So give me 1 second here, and I will bring up the IBM chart, and then we will take a look at it. And here we go. Here's another reason why I think we've got a little bit of a chance to have a rally in the market, and that is if we take a look here at the long-term weekly chart on IBM, as you can see, we've come down and we've gone below the 61% retracement here on the weekly basis. But if you'll look at this chart here over the past 20 weeks or so, you'll notice that the little 3 red dots that you have there, those are 3 drives to a bottom, folks. I was going to bring this out on a daily basis, but I think this shows it a little bit better. But you'll see that we've had the 3 drives to a bottom, and then we also had the hammer pattern that Steve Rhodes has talked to us about before, where the market hammers out a bottom, and that looks very, very interesting here, especially if you go way back to November of 2009, and you'll see, well, that would be November of 2008. You'll notice that we had that same type of hammer pattern and a 3 drive pattern also happening in IBM at the same time, way back in November of 2008. So we've got a chance here for IBM to have a pretty good rally. And also the VIX index, as Basil gave such a good interpretation of it yesterday, as did Steve Rhodes gave a really good one. And that would tell us that there's virtually no fear in the market, which, that happens occasionally, but we'll be able to see the other market's doing the same thing, because we've had the hammer patterns in the S&P, and we made ABCDs in the New York Stock Exchange Index. This market is due to rally. Now, it's very important for the S&P to get above that 1900 level today, because this could just be a little 3-day top. But longer term, and I believe we're looking at something really sinister way out the road here. But right now we're just very oversold, and there's just too many bearish people out there, and we're due for a pretty good rally. Regarding the gold and the silver, if we get above the 1130 level in the gold market, then that would tell us that we're most probably, this cycle high could be coming in. Now, I'm going to bring this up because we've been watching this particular cycle in gold for many weeks now. And as you can see, we bottomed down here in right around the 1st of December. We tested the bottom again on the 15th, and then we've had this rally that has gone up to the 1110 level, and we're trading at around 1097 right now. If we break out above that, we're going to get up to the 1130, 1133 level. That would complete, the $70 rally off the bottom, and that would be equal to the other $70 rallies that we've had in the gold. But silver is lagging, incredibly so it's just really difficult. And also the platinum has been rallying it went down and almost made a double bottom low, and then had a pretty good rally yesterday. So we'll see if that's going to mean anything, but we'll be watching it pretty soon here. So the market's opening now. We'll get an idea of what's happening with the opening indications here in just a little bit. But so far that 1892 has held the stock market for a little bit, and all that is the 61% retracement of those other highs. We're 90 handles off the bottom, so we really need to pop through there in order to get it moving. The bonds and the notes are the ones that I really think that we're going to be looking at as the surprise in these next few months, because it appears to me that that's where the real problem is. It's in the debt market. It's really not in the the stock market, because the debt market is many times bigger than the stock market. And if we look at that, and we'll take a look at the notes here, because that's the biggest market in the world. And unfortunately, I've unleashed an avalanche of jokes into the Tiger TV. I won't do that anymore, I promise. We'll try to keep this open above board. But as you'll notice here on these 10-year Treasury notes on the weekly basis, we are still in a downtrend. We didn't have any major flight to quality on this. And as you can see, the big ABCD pattern on this measures down a good 10% from where we are now. So rates are going to go higher. Now, if you go back to 2012, that's when interest rates topped, and that's when we had bonds at the near 160 level. They got to 159, and then they changed the contract, for these earlier ones this year, but that goes back to normal very soon. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time.
Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and I wanted to do something that I'm going to keep doing until it stops working, and that is this chart on the New York Stock Exchange Index, the long-term chart, folks. Keep this in perspective, because if we go back and look what happened back in 2008 after this thing had broken, it's been following perfectly. You'll notice that we hung in there for 2 or 3 weeks before we finally started another leg down. And this is following perfectly. I don't know if it's going to continue doing it, but right now that's what's happening. So we want to be watching that very, very closely. Another thing to keep in mind is that if we look across the globe of what's happening, and not just in China, but if we look at the emerging markets here, you'll see, and this one has been bearish for a very, very long time, you'll see that we have a long way to go. We got another 20% to go to the downside in the emerging markets to reach a major ABCD pattern, and it's got a really high probability of making it, because the C leg of the ABCD leg was exactly at a 382, and we know that that's a very, very negative sign. That doesn't mean you can't have some good rallies in between, but that's a longer term picture of what we're looking at. And if we look at the Hang Seng over in Hong Kong, you'll notice that we had the same type of pattern that we had with the emerging markets, and that tells us that we're going to get down another 10 or 15%. We had a beautiful ABCD pattern in this, and then it started to break down. Fortunately, we had a lot of friends over in Hong Kong that were alerted to this when we were back at that C level, at C point, in late November, early December, and we were able to alert the folks to really be careful of that. And the same thing was occurring, as you look here, the same thing was occurring in the Japanese market. Let's try it again, Larry. Chinese market at the same time. You'll notice that we had this 3 drive pattern coming in also at a 382 level. Not missed the 382 by about 1.5%, but it also shows that the market, has further to go to the downside. So remember, we're in a different situation, folks. The market has telegraphed something is not right in Camelot. The worst day in January, starting the year ever. Even breaking the level from 1932. Hello, the 12% down in the month of January, and we're not finished with January yet, but that's a heck of a start. And we've taken out the August lows in just about everything, with the exception of the I think the S&P took it out too because it made a big ABCD pattern, and also the NASDAQ also took it out. So when we take out that low, that's equivalent to the low that we had in August the 15th of 2007. So after that, we had one heck of a rally, and that's it. I wanted to bring your attention to folks that are in Tiger TV that get a chance. Is Steve Rhodes has posted the Wilshire 5000 chart showing the hammer candle, that it is a big hammer. I mean, it really, and there's also an ABCD pattern in that, but Steve has pointed this out, and this is 5,000 stocks. That's just not the S&P 500 or the NASDAQ 100 or the Dow 30. This is a lot of stocks that have been oversold or coming back, pretty good. So we'll see if some of this stuff is going to be going on, and we'll see. But overall, gee, you've got to be really careful, folks, for your 401ks and stuff, because we've started something here that is, and you're seeing it across the globe. It's not just us. It's everybody. I mean, there's not a market in the world that's up, or has been over the last 5 or 6 months. That means that something's happening. And if you look at the shipping of what's happening with our transportation stocks and the shipping rates, I mean, my gosh, there was a day last week where CNN reported that there were actually no freighters in between in the North Atlantic between the U.S. and Europe. No freighters. First time that ever happened. So whether that means much, I don't know. We'll have to wait and see. But you're going to get some good rallies in between here and there. But remember, long term, you've got to be really, really careful in here. I've had a request to take a look at this platinum that we talked about, because it did go down and match the low. And then we were able to have a pretty good rally in platinum. We rallied about $20 off of that low to get up to the $830 level again. But it is either a potential double bottom in here, or it's getting ready to to go lower. Frankly, I believe the commodities are getting near a pretty good rally. We've got that long-term ABCD. Crude oil and heating oil are giving us little glimpses of a possibility, as is silver and as is gold. So we'll have to wait and see. I don't personally believe that quantitative easing is going to make any difference. It didn't make any difference during 2015, folks. And my assumption is that this is something that the Fed is going to be sorry for. That's my bottom line. I've had a request to show what the transits look like now as we come in to the this is our chart from our good friend Shane Smolian from wolftrader.net, and as you can see, the negativity that we've been having since the 20th is starting to dissipate a little bit, and we start getting a little bit of positive stuff beginning next week that goes through the middle of February, which is pretty much what we'd like to do. But you've got to use the patterns in order to match this stuff up. Otherwise, you're really not going to be able to match this stuff pretty good. We'll see. If like the gold chart that Larry Edelson has, when that thing stops working, look at something else. That's basically the bottom line. If you got something that works, for heaven's sakes, don't change it. Whether it's look at Basil, how well he does, and Steve Rhodes. I mean, they use a whole lot of different things, and that's what you have to be able to do, is to try to pick out things that work for you, because nobody knows with 100%. That'll never happen of what's happening in the world, but we'll see. I've had a request to bring up the Bradley one more time, and remember, Bradley is another indicator that sometimes is absolutely perfect and other times it's not. And as you can see here, we're looking for a pretty good move upward here into mid-February. And then we'll see if we get moving a little bit differently. Now, we did go down and touch that low from August in the Dow, and now we're going to see what we rallied to. There should be strong resistance about 1,000 points higher in the Dow Jones. That would be a 382 retracement, and you'll be able to find out what's happening. And we've got too many funny people here in this in Tiger TV. They got a really good sense of humor. It was one of the reasons for doing this show, is you can see what's really happening. Okay, now we're going to take a look here at what the markets are doing right now. We haven't had a break as of yet, but we are attempting to break out of this 1895, 1900 level in the S&P. If we got that, we got a pretty good chance for a positive day. I don't know if we're going to close right on the highs or not, but we still have a close, of a positive basis. Gold is still in this trading range, doing pretty much nothing. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, I'm going to wind the show up with a chart from Shane Smolian from wolftrader.net. This is the one we posted a couple weeks ago. As you can see, after the 14th of January, we had that big move down into the 19th and 20th. That's when we hit the 500-point down move in the S&P. And as you can see here, we should be bottoming in the next few days with a rally up into 2000 until the 10th of February. So we'll see how this is working. Just like the gold chart that we got from Larry Edelson, as long as it's working, we're going to be watching it very, very closely, because if it gets us a chance to, put some shorts on up at that 210 level on February 10th, and that's certainly what we're going to be looking at. Of course, it's right after the Super Bowl, so they'll probably have some Super Bowl, whether the NFL or the AFC and the NFC is going to win. They always have an indicator on that it's only a 50-50 anyway. But this has been working incredibly well. And this is some of the things that we worked. George Bayer did this way back in the 30s. There was also a man who was very good at this back in the 30s and 40s named George Marshall. Very little was known about the guy, but he made some fabulous predictions. And he was also using astroharmonic things that were quite important. So we're in the midst of what we think is a little bit of a rally here, based on the things we talked about earlier, and the fact that we've had these hanging hammer patterns form, ABCDs completing in the S&P, and also in the S&P cash was absolutely perfect ABCD to the exact tick. The New York Stock Exchange index went, the number was 9,000 and it went to 8984. So these are going to be, see what's going like that. Someone says we could be at 2100 by February 10th. That's possible. All I know is that it's got a situation here where, these patterns have completed. We'll basically, see what's really happened. So we'll have to wait and see what's really going. Anyway, this is it, folks. Have a wonderful weekend, and those of you in the East, take care of yourself. Don't expose yourself to any danger, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com. Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond,